This is an Uncovered Japan Company research report on Superbag, ticker 3945. Superbag is a Japanese paper packaging specialist with a 120-year operating history. The investment question is simple. Can its focused paper products business recover margin while the market still values it as a small, overlooked company? As of the report's June 2026 source data date, Superbag traded at 4.4 times forward earnings, 0.56 times book value, and yielded 5.24%. Those figures are striking, but they coexist with a clear operational issue. Earnings fell in FY26 as paper products margins weakened. Superbag turns paper into familiar packaging, handled shopping bags, flat-bottomed e-commerce delivery bags, and food containers. It also sells plastics and general supplies, but its identity and economics are anchored in paper. In a market dominated by larger converters, it has to compete through specialist know-how, design support, and an integrated supply model. The 5-year financial picture is mixed. Revenue reached 28.2 billion yen in FY26 after 4 consecutive years of growth. But operating profit peaked in FY24 and then fell for 2 years. That divergence matters because Superbag's valuation can look unusually low without telling us whether its core manufacturing margin has stabilized. The segment mix explains the entire debate. Paper products account for 54% of sales and earned a 7.1% operating margin in FY26. Plastics and the SVS Logistics and Supplies business each contributed margins around 3%. In other words, the group lives and dies on the profitability of its own paper bag factories. The moat is real but modest. Superbag brings long-standing process know-how in paper bags, an SVS model that bundles products and deliveries for customers, and a sourcing relationship with Oji. Yet it lacks the scale economics of bigger packaging companies, so its edge is strongest where integrated service matters more than the lowest unit price. Customer demand is spread across food service, logistics, and e-commerce, retail, cosmetics, and public sector customers. The report estimates food service at roughly 30% of the mix, and logistics and e-commerce at 25%. That diversification cushions any one end market, while delivery bags and paper containers give Superbag exposure to structural packaging demand. The balance sheet is stronger than it was 5 years ago. The equity ratio rose from 17.7% to 40.3%, reaching the company's midterm target a year early. At the same time, return on equity fell from its FY24 peak to 15.6% in FY26. The company now has greater resilience, but investors still need evidence that returns can improve. The core recovery test is factory margin. Paper products margin fell from an FY24 peak of 9% to 7.1% in FY26, pressured by plant maintenance and costs the company struggled to pass through. Management's focus on factory profit improvement, automation, and procurement is therefore not peripheral. It is the central variable in the investment case. Superbag has traded near 4 to 5 times forward earnings, even as profitability recovered from its FY22 loss. Against the closest listed peer, the PAC, the report shows a large valuation gap. But a low multiple is not a catalyst by itself. For the discount to narrow, the company likely needs credible margin recovery, improved cost pass-through, and clear evidence of execution. The report's 3-year scenario work illustrates the asymmetry. The bear case is about 24% below the current price, the base case about 50% above it, and the bull case substantially higher. These are scenarios, not forecasts. They depend on margin recovery, capital allocation, and market recognition, while thin liquidity and a small free float can make the path volatile. To sum up, Superbag is a focused paper bag specialist with diversified demand, a differentiated logistics model, and a much stronger balance sheet. The valuation looks cheap, but the margin decline is real. The most useful indicators to watch are paper products margin, evidence of cost pass-through, progress in factory efficiency, and management's next midterm plan. This is research, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.